October 31st, 2025, a day that shattered the global economic order. Saudi Arabia and Qatar declared they would join BRICS Plus and accept Chinese yuan for oil and gas exports. Trading floors in New York, London, and Tokyo erupted in chaos as the US dollar plunged. Oil futures became volatile, not from supply issues, but from uncertainty over currency. Suddenly, a real alternative had arrived, backed by the world's largest energy producers. For ordinary people, the effects were immediate. Imported goods fluctuated in price, savings in dollars lost value, and travel became unpredictable. The world had entered a new, uncertain era. To grasp today's upheaval, we must revisit the 1970s. After Nixon ended the dollar's link to gold, the US struck a deal with Saudi Arabia. Oil would be priced in dollars, and surplus revenues invested in US treasuries. In return, the US provided military protection and political support. This PetroDollar system created a permanent global demand for dollars, making it the world's reserve currency. Central banks everywhere held vast dollar reserves, allowing the US to run trade deficits and print money with impunity. The dollar became not just a currency, but a tool of American power, enabling sanctions and control over global finance. The world traded on American terms, with the US Treasury as final arbiter. This system underpinned US leadership for decades, but it came at a cost. Developing nations were vulnerable to US monetary policy swings, and rising powers like China felt constrained. The petrodollar's stability masked growing frustration among those forced to finance their rivals' debt. Over time, the very power the system gave the US fueled a desire for alternatives. For many, the petrodollar became a relic of a bygone era. The seeds of change were sown by the system's own success. Now, those seeds have borne fruit. The world is witnessing the end of the petrodollar's monopoly. A new chapter in global finance has begun. The question is, what comes next? The answer will reshape the world. The Oil for Security Pact of the 1970s was built for a different world. Back then, the US was the Gulf's main protector, and the Gulf states kept oil and dollars flowing. But over the past 2 decades, priorities shifted. The US shale revolution reduced American dependence on Middle Eastern oil, and costly wars led to fatigue with regional entanglements. Washington's focus pivoted to Asia, leaving Gulf allies questioning the value of the old security guarantee. Meanwhile, China became the primary customer for Saudi and Qatari energy, pricing oil in dollars for a declining customer, while their biggest buyer paid in another currency, made less sense. Political tensions with Washington over Iran, Yemen, and human rights widened the rift. China offered a partnership based on trade, investment, and non-interference. For Riyadh and Doha, this was a chance to diversify alliances and assert autonomy. Joining BRICS and accepting the yuan was pragmatic, not hostile. It reflected a new reality. The world of 2025 is not the world of 1975. The old bargain had run its course. A new era demanded new alignments. The PetroYuan is more than a buzzword, it's a direct challenge to the dollar's supremacy. China, long the world's factory, was determined to escape reliance on its rival's currency. Beijing built alternative financial infrastructure, the Shanghai Energy Exchange, currency swaps, and CIPS, a rival to SWIFT. The PetroYuan system recycles oil money into Chinese goods, investments, and Belt and Road projects, creating a yuan-based ecosystem. With Saudi Arabia and Qatar on board, the PetroYuan has reached critical mass. Other nations may follow, especially those with large trade deficits with China. The global financial system could fragment into dollar and yuan blocks. Yet the yuan faces hurdles, capital controls, limited convertibility, and less trust than the dollar. Still, today's announcement signals China's intent to build a new system. The journey to a multipolar currency world has begun. The dollar is no longer unchallenged. The rules of global trade are being rewritten. The future is up for grabs. Saudi Arabia and Qatar's pivot to BRICS and the yuan was a calculated move. For Saudi Arabia, it's central to Vision 2030, diversifying beyond oil with China as a key partner. Chinese investment is building new cities, infrastructure, and a manufacturing base in the kingdom. Trading in yuan cements this partnership, reduces costs, and secures Saudi Arabia's post-oil future. For Qatar, As the top LNG exporter, Asia's energy demand is vital, and China is a primary customer. Yuan-based contracts are becoming the norm. Qatar's 2017 blockade experience taught the value of strategic diversification. BRICS membership offers diplomatic leverage and independence. For both nations, this is about sovereignty, no longer being junior partners in a US-designed system. They seek to shape their own destinies as major powers. Embracing a multipolar world is a declaration of independence. The move is pragmatic, not ideological. It's a bold step into a new global order. The impact of this shift goes far beyond finance. US-aligned nations like Germany, Japan, and South Korea now face tough choices: stick with the dollar or pivot to the yuan for energy security. This could fracture traditional alliances and force a realignment of global partnerships. For the global south, a credible alternative to the dollar could be liberating, offering new trade, loans, and development opportunities. South-South trade and financial networks may flourish, reducing Western dominance. In the West, a weaker dollar means higher prices for imports and travel, fueling inflation and discontent. The era of cheap goods powered by dollar dominance may be ending. This is about more than economics. It's about shifting power and influence. As financial multipolarity grows, so will cultural and political diversity. The Western liberal model faces new competition from alternative systems. The world is entering an era of genuine ideological rivalry. The assumptions of the post-Cold War order are being challenged. A new global reality is taking shape. For the US, this is a profound challenge and a potential turning point. The instinct may be to retaliate with sanctions or pressure, but that risks accelerating the dollar's decline. The wiser path is adaptation, accepting the end of unipolarity and focusing on leadership, not dominance. America's strengths, innovation, alliances, and deep markets remain formidable. The dollar will still be a major currency, but the US must earn global trust, not demand it. Domestic renewal is key. Invest in education, infrastructure, and technology to stay competitive. Treat allies as partners, not subordinates. The end of the petrodollar could even spur a healthier US economy, less reliant on deficits, more focused on exports and manufacturing. This adjustment will be tough, but it's an opportunity for resilience. The real test is whether America clings to the past or builds a new foundation for future influence. The world is watching how the US responds. Leadership now means adaptation, not nostalgia. The next chapter depends on the choices made today. The move to a multipolar currency world is risky and unpredictable. Instability could surge, currency swings, trade disruptions, and new protectionism. Economic blocs may form, fragmenting global cooperation on issues like climate and security. A new Cold War, with financial and technological battles, is a real danger. Yet, a multipolar world also brings opportunity. Competition can drive innovation and accountability. Nations gain more options for trade and diplomacy, tailoring policies to their needs. BRICS institutions could offer new financing for the global south, challenging the old order. If managed wisely, this could lead to a fairer, more representative global system. International institutions may finally reform to reflect today's realities. The challenge is to balance competition with cooperation. Diplomacy and international law are more vital than ever. The stability of the system is a shared responsibility. We stand at a historic crossroads, an era as consequential as the fall of the Berlin Wall. The Saudi and Qatari decision is a symptom, not the cause of a new global era. The world is shifting from uncontested US dominance to something new and undefined. The future, chaotic or balanced, depends on choices made now. The petrodollar and PetroYuan symbolize competing visions for the world. One is rooted in alliances and free markets, the other in sovereignty and state-led pragmatism. And this is a contest of ideas, values, and models for global order. The US and its allies must adapt, reform, and share power to remain relevant. Rising powers must build something better, not just replace one hegemon with another. The opportunity is a truly multipolar order based on law, respect, and shared responsibility. The choices of leaders in Washington, Beijing, Riyadh, and beyond will shape the century. Will we descend into rivalry or build a fairer, more stable world? History is watching.